under the second stage, 4 steps. So 2 steps, 2 stage with 7 steps. Okay, let's start. Philopatier Company owned by Miss Nadine for selling jewelry during March 2019. The following event occurred. March 2. Nadine received from her family to start her business the following $50,000 and new equipment costing $20,000 and $500. So here in this transaction, we have 2 or 3 sides. This transaction effective for 2 or 3 sides in the journal entries. Nadine, 3, yes, 3, thank you, 3 sides. Nadine received from her family.
Okay, that's what I was confused about. I added 3 steps, okay.
Yeah. As the last problem, the same. Nadine received from her family 50,000. That's told us 50,000. But here didn't record the cash. But I have to know this mean reflect cash or indicate cash. 50,000 received from her family, 50,000 cash and new equipment. So Nadine received from her family 2 things. Cash, $50,000. Equipment was cost $20,500. And both of them, I will record in the journal entries as assets, increase the debit side. And the same time, the third one, owner equity, it's gonna be increased also with the total amount. So I have to count $50,000 plus $20,000 $500, so it's gonna be $70,000 $500 SUA. So here, journal entries, the first request, journal entries. Date consists from date, pay attention, description, and 2 sides, debit, credit. So first one, March 2, Nadine received $50,000. So mean cash going up. I start from the debit side, cash going up here from the left side. Debit side mean left side, credit side mean right side. So here to effect, in this transaction to effect in the debit side, left side, and another effect in the credit side, in the owner equity. So cash going up by $50,000, and the same times equipment as assets too going up. So I have to record it in the debit side, in the left. Close my button. Left. I told you, anything come in your business, increase your business, that's mean close your body. Because this is the left side. Decrease your business going out in the credit, far from your body, credit. So cash going up with the $50,000, and at the same time equipment going up to as assets. I have to record in the debit side too, equipment with $20,500, and these count both this amount in the debit side and put in the total amount here in the credit side under owner equity or capital is the same. So here owner equity See, I start here in the credit side. I have to go in the right side here. I start capital or owner equity. With $70,500. March 2 finished now. So they explain Nadine started her business with 70,500 and count equipment and cash. Easy. Next one. March 4, office supplies were purchased with agreed payment for $4,000. As I told you, I have two sections. Figure about cash here, going in my business or spend, and which part, which assets coming in my business. Okay? Here in this transaction, I purchased something. I purchased office supply. So supply here coming in my business. This increase my debit side as assets. So you don't record the assets, you will record supplies because this account name office supplies. Okay, but I pay it immediately or I purchase this stuff on account. Pay it immediately, Aaron. We pay it immediately here or we on account?
It's on account, right?
Yes, because with agreed payment, that's indicate on accounts that you have account payable, right? You have liabilities or obligation. So here, March 4, I will record like this. Easy. Sides coming in, supplies, office supplies. So I will record the office supplies in the debit side because this coming in my business, so increase my the debit side, and the supplies as the assets. When increase any assets, you have to record in the debit side and the left. I repeat to make sure everything right, to make sure everyone understand. So supplies here in the debit side, increase the debit side, so I have to record in the credit side, the debit side, so the left side with 4,000. And the same time, on accounts, that means our liabilities going up or going down. Who can tell me? Going up. Perfect answer. Our liabilities going up because we purchase this supplies, but still we have obligation to pay later. So account payable and the credit side going up to with $4,000 because we know that our equation here, I told you here, assets equal liabilities plus owner equity we have two sides here. And we have also two sides here. Assets here, we talk about the left side. That means any cash coming in, any land, equipment, supplies, all these increase the debit side. Increase the debit side because coming in our business here, cash, land, equipment, supplies, all these when they're coming in my business, that increase this side because coming in my business. I talk about the left side. Coming in the left side debit. So this debit. So if these accounts, one of these accounts going out, my business that's going out here. So cash if that going out my business gonna be here in the credit side. I will record in the credit side because going it down. So if you record the cash in the credit side, that's mean cash going out your business. You have to record in the credit side. Credit side reflect or indicate in the right side. So cash here. As the same, land or equipment or supplies. Here going down. Here going up. So debit side going up, credit side going down. Under the assets. Liabilities, the opposite of the assets. Because we talk about this side called right side. Right side. So any transaction effect in the right side, if the effect increasing, I have to looking for the right side. In a right side, credit. Right side, credit. So any transaction effect in the right side, if the increasing, it's gonna be here. If the decrease will be here in the left side. Left side. Debit. Debit. So here, right side. Any effect for the right side increasing will be here in the right side because I talk about the right side. So here left side, if any transaction effect in the left side will increase the left side because the left side. Right side, any transaction increase this right side. Like account payable. As we see, so if the account payable decrease, if the account payable decrease, what's mean? I have to record in the debit side, left, because the opposite here, right side, debit and credit. Here, left side. So right side here, any transaction affecting the right side increasing will record in the right side. In the credit, right side, see? Right side credit, right side credit. So any transaction decrease the right side, I have to record in the opposite side. Opposite side mean indicate left side. This is the opposite this side. So the opposite right side, left side. Opposite right side, left side. Right side here, increasing, going up. Left side here, opposite, going down. Because all this section under the right side. All this section assets under the left side. So here, in this transaction, excuse me, with agreed payment mean account payable going up. When the account payable going up, that's mean liabilities going up. I have to pay this later with agreed payment. So the left side here, increase or decrease? Liabilities. We talk about the right side or left side? We talk about the right side because all these under the section right side. This section right side. This section left side. So here account payable going up. That's why I record here account payable in the credit. What's the mean credit? Right side. because liabilities or account payable under liabilities is the right side. For here, that's why increasing. March 10, Philobatier company obtained loan of $20,000 from the bank. Loan obligation or not obligation? Liabilities or not liabilities? Yes. So also loan, I have to record as account payable or as with the name of account. Loan. Account payable if you buy something on account. Here different. You lend from the bank. Take loan from the bank. So that loan liabilities. So I have to record this liabilities in the credit side, right side. And at the same time, going up cash by $20,000 because I take cash from the bank. I take cash from the bank. So that means I have assets going up with $20,000 cash, and the same time in the credit side going up to loan as a liabilities. I have to pay in the future, not account payable. With someone record account payable, this is not right. You have to record bank or loan, okay? Because this obligation or this liability. But account payable, focus on anything on account you have to pay later on account. This liabilities, direct liabilities. Take it from the bank, loan, have this liabilities under loan. So cash here going up with the value $20,000. So I have to record in the debit side $20,000 as the assets, and loan in the credit side, bank loan in the credit side with 20,000. March 10. Okay. March 11. Who can read March 11? And tell me what you understand. Okay, Aaron, go ahead.
Dean received from her family $5,000 to celebrate her birthday. The party costing $6,000. She paid $4,000, and the remainder was on her account.
Okay, can you slow slowly to understand what we mean? Here, Nadine, March 11, Nadine received from her family $5,000 to celebrate her birthday. So Nadine received $5,000 to celebrate her birthday. The party costing $6,000. She paid $4,000 and the remain on account. This transaction relevant with the business. On this transaction, not relevant with the business. Question. March 11. This transaction relevant with the business or this?
Personal, so you don't count.
So this no transaction. Not effect in my business or Nadine business. You know why? Because this personal side. No any something with her business. Just Nadine received from her family to celebrate her birthday. So the birthday impact any something, any influence or positive or negative in her business? Nothing. This is a person. She received this money as a person and she free to spend or not spend. So no any something or no any effect in her business. So March 11, no transaction. Okay? March 12. Who can read? Michael. Or okay.
Philobatier paid the utility bills for $2,700.
Okay, so here in this transaction, فلوباتيل paid the mean cash going down and the utility as expenses going up. And I told you, when you see utilities, withdraw, dividends, any something from this account, any account from this account, close your eyes and record in the debit side. And you will see the credit side affect cash. You pay this cash or on account. If they pay cash, going down cash, you have to record in the credit side as assets, because assets when going down after record the credit side. Or if the liabilities you pay on account, like pay with a check or something, you will record account pay. Okay? Here in this transaction, utility as expenses, utility and cash. How much? 2,750. 2,750. March 12. Okay. March 20. Nadine invite her friends to take the dinner with her, and she pays the cost 200 cash. This transaction or not transaction? Not transaction? Why?
Because it's not related to her business.
Perfect. So this also no transaction. Okay? Because she just invited her friend. Hi guys, I'm here. I want to take dinner with you. Okay. Okay, and she pays the cost of the dinner, 200 bucks. So there's no anything effect or impact in her business. There's a personal matter or personal case. Okay? Move on. March 24. Who can read?
Do you want me to do it?
Okay, Christian. Sorry.
Philip
Batir.
Batir completed services in March and revealed to clients Nancy Flowers $18,300.
What does that mean?
That means that their accounts receivable is going up because somebody owes them $18,300, and their services will be going down because they provided services.
Service going down? No. Service going up too. Revenue. Service revenue. Because Nadine provides service for Nancy with $18,000 and $300. Okay? So that's mean Nadine already earned the service revenue. Already taken the service revenue. And the same times account receivable going up as assets because she didn't receive cash, but just she sent her bill to the customer, Nancy customer. So Nadine, in this case, she completes the service, but she didn't receive the money. What does this mean? Account receivable going up as assets, and the same time is revenue, service revenue going up too. Or you can record fee earned with either. If you record service revenue, that's correct. If you record fee earned, that's correct. Okay? So March 24. March 24, account receivable going up with $18,300 in the debit side, and the same time is service revenue. Service revenue. Service revenue going up too in that credit side with 18,300. Okay? Here's service revenue. The last one, who can read? Aaron.
Sure. March
Thank you.
30th, Miss Nadine withdrew $6,000 for personal use.
What does this mean?
She took it out of the business's account.
She take $6,000 from her bank account, withdraw. Yeah, come, go ahead. Thank you. Record. She take $6,000 as drawing, withdraw from her account. That's mean withdraw going up here, withdraw effect in the debit side, and the same side in the same times. What's effect here too? Cash going down, right? Cash going down, right? Here, withdraw $6,000, debit side, cash $6,000. Why cash going down? Yes.
I had a separate question.
Yeah.
I was gonna ask, why couldn't you, I did it as an account receivable, because she still has someone owing, like the business still has someone owing them money. Does that work?
Not work, but cash. Because she take money or she lend the money from her business, already taken. So that's mean her business going down with the cash account. Her business as a owner equity here,
Okay.
going down with the cash. So, but we can't record the owner equity.
Okay.
Here will affect in two sides in the balance sheet. In owner equity, withdraw,
Okay.
going down, and the same times in the
Assets,
Assets.
cash. Okay,
okay.
yeah.
So here withdraw. Let's see here. Withdraw, as I told you, utilities, dividends. Withdraw, you have to record in the debit side. Okay, because this affect in the owner equity. Withdraw, utilities, dividends, you have to record in the debit side. Effect on the debit side, on the owner equity. So here, withdraw. And in the debit side with how much? 6,000. And the cash too decrease with the $6,000. Okay? Clear? Question? So move on. Section 3, part 2. We will convert each account from the journal entrance to posting in general ledger account. Now we will post in general ledger account. Okay? Can you pay attention? Please, okay? So, general ledger account here. The first account, cash. So, general ledger contain from date, description, and debit, and credit. So general ledger contain from date, description, debit, and credit. So the transaction one or the account one, cash, That's why I draw the table for the cash. So I have to convert and convert from each account here from journal entrance to general ledger account. So posting cash here debit. So I have to take the number in the cash in the debit side, copy paste, put it in the debit side too under the cash account. But in the description side, I have to record the capital with $50,000. Here, cash, March 2, cash here, record owner equity, and the debit side, as I told you, copy $50,000 from cash, here, $50,000. That's it. Take amount from the cash. I will see cash here, debit or credit, debit side. How much? $50,000. So I put under the cash, debit side, $50,000. This is cash. Okay, but the description, this cash increase what? Or if effect on what? On two sides, cash and owner equity. Here I have to record owner equity in the description. March 2. Next one, where is the cash here? As a debit here, March 10. Cash, how much cash here in the debit side? 20,000. So I will convert 20,000 in the debit side too. Here, I will record $20,000. Copy paste. So what's the account there? Loan. Bank. Loan. Let's see here to be easy for you. Here cash, $50,000 debit. Copy here, $50,000 debit. Where is cash here? March 10, cash, $20,000 in the debit. I will finish first debit side and then go for the credit side. Under cash account. We posting to cash account now. Work in the cash account. After finish cash account, in the order, I will go in the equipment account. So, cash account here in the March 10, cash debit with $20,000. I have to record as I see $20,000 debit. Which account here? Bank. Bank loan or loan. And record March 10. Okay? We have cash in the debit side. Let's see. Here we have cash in the debit side.
Just for bank loan, right?
That's it. Okay, we have cash here. We'll see. We have cash in credit side. So, cash in credit side. Where cash in credit side? There. By 2,750. So I will here to go in this side. 2,750. What's the account? Who can tell me what's the